Retail, 29th of November 2023, growing older India rises as China slows down. The S&P predicts 7% GDP growth for India by 2026. India's GDP is predicted by S&P Global Ratings to expand by 7% by 2026, outpacing China's projected growth of 4.6%. According to the report, China slows, India grows. South and Southeast Asia will replace China as the region's main growth engine in the Asia-Pacific region. S&P predicts that India's GDP would grow at 6.4% in the current and upcoming fiscal years and reach 7% by 2026, while China's GDP will slow to 4.6% in 2024. According to our projections, China's GDP growth will drop to 4.6% in 2024, 2023, 5.4%, gradually increase to 4.8% in 2025, and then rebound to 4.6% in 2026. According to S&P, we anticipate Indonesia being constant at 5%, Vietnam at 6.8%, 4.9%, the Philippines at 6.4%, 5.4%, and India at 7.0% in 2026. On Monday, a US-based rating agency predicted that India's GDP would grow by 6.4% in the current and upcoming fiscal years. The growth rate was expected to increase to 6.9% in 2025 and 7% in 2026. S&P said that since the central banks of Asia-Pacific will probably maintain high interest rates, debt service will become more expensive for the region's debtors. Concurrently, escalating hostilities in the Middle East may strain international supply lines and drive up energy prices, fueling inflation. S&P says high prices undermine demand, and high input costs diminish company margins. It added that Asia-Pacic's development is vulnerable to oil shocks, the intensifying Middle East conflict, and weaker global demand, the possibility of a U.S. hard landing. We reduced our forecast of 4.4% to 4.2% growth for the region, excluding China, in 2024. Different industries have different prospects. Manufacturing focused on exports is expected to do poorly, according to S&P.